The nonprofit MBA purpose is to provide new business insights and fresh creative ideas for executive directors and their teams that will help them improve their organization. Here is your host, Stephen Halasnik.
Welcome, everyone. My name is Stephen Halasnik, and I will be your host for today's Nonprofit MBA podcast. I'm co-founder of Financing Solutions, and Financing Solutions is the leading provider of lines of credit to small nonprofits in the United States. We've been around for over 12 years, and our product is extremely popular with nonprofits. They never had the opportunity to get lines of credit before, and now they do. So if you're interested in learning more, please visit our website at nonprofitmbapodcast.com. And we also have a proud sponsor for today's podcast. In fact, the president of the company is going to be our speaker for today too. But Araize is the name of his company, and Araize, ARAIZE.com, is a cloud-based accounting software that's specifically made for nonprofits. And I've said this many times, I really believe that it is great to have software that's specifically made for your industry, and versus taking something like QuickBooks and trying to make it work for your organization. In fact, one of the nonprofits that I'm on, the board of, we just moved to Araize for our software package. So if you're interested in learning more about Araize, please visit their website at ARAIZE.com or call Joe at 866-840-7449. And today, of course, I am happy to be speaking again with Joseph Scarano from Araize. And today's topic, I know it's going to get a lot of interest, is key things to know when filling out a nonprofit 990. Joe is the CEO of Araize. They're a software provider for nonprofits. He is an inactive CPA and has spent over 40 years providing accounting services and software to the nonprofit industry. He has served on numerous nonprofit boards as treasurer. Joe, welcome again to today's Nonprofit MBA podcast.
Thank you, Stephen, and happy Ides of March, everyone.
Yep.
Appreciate being on the podcast again, and look forward to telling everyone and disseminating some information about their 990s.
Speaking of the Ides of March, when you think of March, I always think of April because that's when taxes are due for personal tax return.
1 month.
Right, in a month. So when are, speaking of that, when are 990s typically required to be done?
Just like a corporation, the 990 is due 2.5 months after the end of their fiscal year. So today would be the deadline if your fiscal year was December 31st. March 15th is the deadline for filing your annual 990. Last time we got together, we talked about payroll and the misconception that nonprofits don't have to pay taxes. They do have to pay taxes. They have to pay payroll taxes for their employees if they have employees. While a nonprofit does not typically have to pay taxes unless they have some sort of unrelated business income, where they might have a business that is not related to their nonprofit mission, they might have to pay taxes on that. All nonprofits do have to file annual returns with the IRS to make sure that they have kept up with their nonprofit status, and the nonprofits, the IRS needs to make sure that they are fulfilling their obligations, to keep their 501c3 status. So that return that is being filed with the IRS is not for there's no taxes involved with that, but it's an information return. So like some individuals file a 1040 EZ and some file a full 1040, depending on the nonprofit size, they have 3 different 990 forms that they have to complete. If a nonprofit's revenue is less than $50,000 a year, they can do what's called a 990N postcard. it used to be that they could fill out a form, and it was a postcard, and mail it to the IRS. Now that is all being done online. There's no more paper 990Ns being filed. So if their revenue is less than $50,000 a year, they go to the IRS 990 filing website, and all you'd have to do to find it is do IRS 990 form, and there'll be a link to complete the 990N postcard. Essentially, it's just an information that the IRS is looking for. Are you still in business? What were your gross revenues for the year, and are you still an operating concern? So they ask for some key information. Of course, your nonprofit name, your federal tax ID, the executives at the nonprofit, and a few other informational questions. Very, very easy to complete on your own online. And so that's why, it was all on a postcard, on one side of a postcard. And if your revenue is greater than 50,000, but less than 200,000, or your total assets is less than 500,000, then you do the 990EZ. Now that's much more involved. That includes financial information, your information from your statement of financial position, which is your balance sheet. So your assets, liabilities, and net asset balances, and a summary statement of activities or income statement. It's pretty easy to complete that form. There's not a lot of additional supplemental data on the 990EZ, but it's obviously much more involved than a 990N. And then there's the 990, the complete 990, and that is if you have assets greater than $500,000, 500,000, and your gross receipts is over 200,000. So it's either or. Gross receipts over 200,000, assets over 500,000, then you have to do a full 990. And that's much more involved. You do have to fill out a form on your balance sheet, your statement of activities, much more detail than the full 990. I believe the 990EZ. I believe the 990EZ, and it's been a while since I've completed it. I think the 990EZ just has assets, liabilities, net assets, whereas the full 990 has a breakdown of all of your assets, liabilities, and net assets. Then when it comes to your revenue, there are multiple line item categories of revenue. Grant revenue, program service revenue, that's actually services that you bill for. Maybe you're a medical clinic and you're billing for services. Or you are a shelter and you charge for some of the services you provide, or you're a counseling center, and maybe some of your revenue is coming from the clients that you're servicing or insurance reimbursements. Then there's fundraising revenue that is broken down by charitable contributions, straight donations, or fundraising event revenue. So that's really important to be able to segregate that information. So a fundraising event revenue would be, let's say you have a black tie dinner and you have people paying for tickets for the dinner, or people that are sponsoring the dinner. That is classified as event revenue because the donor is receiving something in return for their donation. It's just not a straight, donation. And then there's other line item revenue categories for interest and rent, and very similar to what an 1120 might look like with different line item revenue. And then the expense side is where it gets really complicated. It's not just every line item expense: salaries, payroll taxes, fringe benefits, professional services, utilities, telephone. Every line item expense category on the 990 has to be split into three areas. They call them functional expense categories. There is your support services, which are management and general expenses or administrative expenses. then fundraising expenses, the money that you expended raising funds, your development office, the cost of your website for donations, the cost of putting on your fundraising events, your salaries for your development office, and then your program-based expenses. The program-based expenses is, what is the purpose of your nonprofit, and what expenses did you incur executing your mission-based programs. So that's where the 990 gets a little bit more complex. Then there are multiple supplemental reports about your mission, about, how much money did you spend or revenue received for each of your mission-based program activities, grant revenues, and there's also information about outcomes, measuring the effectiveness of those programs. Then you have to break out your top donors. You have to itemize and list anyone who's donated more than $5,000 to your organization. They are listed in detail on the 990. So it's pretty complex. It's sometimes even more complex than what a corporation has to complete for their 1120.
Online websites like GuideStar, and some of the other ones that are out there, did they get the 990s because someone from the nonprofit uploaded them, or did they get them from the IRS website or something?
They get them from the IRS website. It's public information. So they
just scrape it and it goes up.
Yep.
So if everybody, if you don't know this and you're the executive director listening, you should know that that GuideStar or some of the other ones, you're not familiar with them, they have your 990 from past ones, as long as if you filed them, and donors will look for that,
Yes.
because they're going to want to look at, depending on how much money they're giving, they're going to see, if you're legitimate, if, where your money's going, how much money you're making, if an executive director standpoint, they want to see all that stuff. So, and also, if you haven't filed a 990 in a while, and if they're savvy enough, they're going to say, "What's going on here? How come they haven't filed a 990?"
Well, so if you don't file a 990, you're going to lose your 501c3 status.
How does that? Let's say someone didn't file their 990, right? Does the IRS send you an email saying you are? They do.
Yeah. Well, IRS, everything from the IRS is mail. You'll never get a notification from the IRS via email for security purposes. So if you ever, if anyone ever receives an email that says it's from the IRS, it's not. The IRS never sends emails for security purposes. So that's a phishing email. That's spam.
Do you think that all accountants are good at filling out 990s?
No, because if they don't have experience working in the nonprofit sector, and let's say you've mentioned this earlier in the beginning of the podcast.
Yeah.
Organizations that are using QuickBooks. QuickBooks is not set up to do nonprofit accounting. So if the nonprofit has an accountant or bookkeeper who doesn't understand nonprofit accounting, they're not going to segregate their financial activity by functional area. They're just going to say, this is a telephone expense. This is a utility expense. This is, my accounting services, my legal services expenses. So then if an accountant comes in and pulls the data from QuickBooks to do the 990, and again, this is for organizations with revenue over $200,000. They somehow have to figure out the expenses and where to categorize them. I don't know. Do they guess? Do they apply a percentage? And getting back to GuideStar, one of the key things that potential donors might look at for your organization is the reason the 990 breaks out your expenses by functional area is they want to know, and executive salaries is a line item expense on the 990. So a potential donor will see how much are executives getting paid. And if they see executives are getting paid in inordinate amount, and or a high percentage of expenses are administrative, that's not really a good flag for the nonprofit. They Nonprofits try to minimize administrative expenses. They really need to be on the up and up on that. And, they can't um, just make up numbers. They have to have it, an audit trail as to how they're classifying expenses. But if a nonprofit has very high administrative expenses, it doesn't look good in the light of some potential donors.
What do you think are some red flags that send a higher signal to the IRS that you need to be audited because of something that you put on the 990? What are some of the areas that you think the IRS looks very closely at?
No administrative expenses. Someone has to run the organization. You typically, in a small nonprofit, employees wear lots of hats. So it's not uncommon for the executive director to be, helping run a program, helping to raise funds. So it is normal to take that individual salary and allocate it across management in general, program, and fundraising. But if you can't get around saying that the executive director did not do any administrative work. If you have zero administrative expenses or very, very low administrative expenses as a percentage of total expenses, that's something that the IRS might look at and question. It really doesn't impact their 501c3 status, but and honestly, in all my years of working in the nonprofit sector, I can't even recall any time that any one of our clients was audited by the IRS from their 990. It's not because there's really nothing to gain from auditing from the IRS's standpoint as to other than rescinding their 501c3 status. So, with reasonable reporting on the 990, the IRS pretty much will accept it. Not to say that you want to fudge the 990, but auditing a 990 probably is not something high on the priorities for the IRS. But you still want to make sure that the 990 is accurate, that you're completing it, with a clean audit trail back to your accounting system, and you are properly allocating expenses to the three main, functional areas.
Does good accounting software for nonprofits create the 990?
It'll create all the information for the 990 and might give you the data, as file exports to feed into the 990, but to actually create the form, I don't know of any software application that does that.
But so in the case, let's talk about your software. So when someone goes to put an expense in, will the software ask you, is this one of these, because it knows it has to produce the information for the 990. It knows that the expenses have to be categorized for administrative. What was the category? Was it administrative? Whatever.
Yeah, there's three categories. Program, which is your mission-based activity.
Yeah.
Management in general, and fundraising.
Yep. So does the software automatically ask you, is this one of these three categories?
Yes.
That's great.
Yeah, a good nonprofit accounting software, regardless of which application you use, should give you the ability to segregate your expenses by functional expense. This is a management in general expense, this is a fundraising expense, and this is a program expense, whether it's a homeless shelter, a food kitchen, a ministry, a church. Well, churches don't have to file 990s. That's another thing. If you're a church, you do not have to file a 990.
Yeah.
So any good accounting software will give you the ability to create those segmented chart of account structure that when you record an expense, you identify, what one of those three categories it is. And you can have multiple programs. You can have an after-school program, a daycare program, a shelter. And so each one of those is a separate program that are all combined when you do your 990.
What happens if you don't file your 990 on time? Do you send with a corporate return? What do you do?
You can file an extension.
Okay.
Just like a corporate return, you can file a 2.5-month extension. You can file an extension for an extension, but then after a while, you do have to file it. And if you don't file it, you eventually will get a notification from the IRS that you must file your 990 by a certain date. And if you don't, you then are jeopardizing your 501c3 status.
So what happens in the cases where, have you ever seen a situation where they rescinded the 501c status? Yes. What happens next?
Well, then you have to file all your missing 990s. If you missed 3 or 4 years, you have to file each year that you're missing. And then you have to reapply to get your 501c3 status restated.
Is it easy to get it back?
If you file your 990s and you, comply with what the IRS is requesting of you, then yes, you can get your status back. It's kind of sad, but we have received quite a few calls from nonprofits that did not understand their obligations with the IRS and just didn't even know they had to file a 990 and went about their business, whatever their mission was. And a couple of years later, they get notifications that they didn't file a 990 and their 501c3 status is on hold. So how that impacts the nonprofit is, going for grants. If they have any contracts with state, county, or local government agencies for services that they provide, they will, all those contracts will be void moving forward. It also could jeopardize their fundraising efforts. If they're out seeking donations, if they don't have a 501c3 status, those charitable gifts are not tax deductible.
Any horror stories that you remember about 990s that organizations had, anything in general that you can think of?
The horror story is not filing, where they not knowing, not willfully not filing 990, just not being educated as to what obligations they had as a nonprofit to comply with the regulations that the IRS states that you need to file an annual 990. And they do make it pretty simple for the smaller nonprofits, with the postcard and the 990 EZ. But if you are over 200,000, which is, not a lot of money for a nonprofit, especially if you have employees, if they have not filed their 990, they all of a sudden get notifications that they their 501c3 status has been rescinded, and then all of a sudden their funding streams are drying up because they can't go to wherever they were getting money from in the past to get additional, grant renewals and contract renewals. And whether or not donors will do the due diligence when they're donating to a nonprofit. If the nonprofit is no longer registered for the IRS and they see on GuideStar, which is a great resource, I'm glad you brought that up, for them to look at nonprofits if they're looking to make a donation. If they're not listed under GuideStar and the GuideStar shows that their 501c3 status has been revoked, then that's the horror story.
Mm. I don't know if you know the answer to this question. How long does it take something to go from you submit it your 990 to the IRS before it gets onto GuideStar? Any idea?
It's usually a year.
A year. So it'll always be a year behind.
Yeah. So, right now, being 2023, the 2022 990s probably won't be there till the end of the year.
So it'll be 2021. Okay.
Yeah.
What about I was going to ask you, what happens if you close down your nonprofit? Is there a form you need to fill out?
Yeah, you have to notify the IRS that you're no longer in operations. T- According to IRS rules and regulations, if there are any assets left over in the business, the board, the oversight committee, the executives cannot touch those assets. Those assets need to be redistributed to other nonprofits.
Oh, or given to the people that the nonprofit served?
Yeah, and then, if they totally liquidate all of their cash, and if they're serving the community, providing assistance, food assistance, welfare assistance, rent assistance, that they distribute it, but they can't just give it out to. I might be wrong about this, but I don't think they can just give money out. Unless that's their mission. Distributing funds to the poor.
And what happens is, like, if the executive director or the board took that money for themselves?
It would be considered compensation, and it would be taxed.
Okay. So then it would so there'd be taxed as payroll tax, not
Right.
as business tax,
Right.
right? Right.
Right.
Well, that would happen anyway, because when you issue, unless they issue a 1099, I guess, but you wouldn't want to issue a 1099 to somebody who was a W-2 person, and like the board would be a little different. But even then, but
yeah,
right?
The IRS would probably question, why did you issue both a W-2 and a 1099 to the same individual, where
and
it
that's
really
a
should be
red flag
taxable,
again.
should be taxable as salary.
What about I know what about the issue that you have where you have employees that are working 40 hours a week, but you pay them a 1099, and does the IRS, I know they don't like that on the business side, but do they not like that on the nonprofit side too? Is it a red flag?
The IRS will considers nonprofits, businesses exactly the same when it comes to employment law. If the nonprofit is controlling the hours worked by their employees, and they're not and they can't demonstrate that they're independent contractors, where the independent contractor says, I'm only available 12 hours this week to work for you, and the nonprofit turns around and says, no, you need to be available 40 hours a week, that would make that contractor an employee and would have to be put on salary. So if the nonprofit is controlling your time and hours when you work, then you're considered a salaried employee. Whereas if the independent contractor controls the time worked for their clients, if they're nonprofits, then you can get a 990.
I'll tell you from personal experience, because I've had this issue. If you have someone who's working 40 hours a week and you have them on 1099, they should not be on a 1099. I'll just tell you right now. Period.
Yes.
Okay.
Exactly. Yes.
So if someone's working 40 hours a week and you're putting them on 1099, you're putting your nonprofit at risk. Seriously, because payroll taxes are completely different too. They want their money, the government.
Yep.
They want their money, and if someone's working 40 hours a week and you're paying them 1099, they're not getting their money.
Yes.
And then they don't want to be chasing somebody after. So there's something called 20 rules that the IRS uses to determine. But in general, number one rule is if someone's working 40 hours a week, there's no way they should not be considered a W-2 employee. So just a heads up on that as well.
For those listening, go back and revisit the podcast that Steve and I did last month on payroll. So we touched on that. And I'm glad you brought it up again, because that's where nonprofits and regular businesses are exactly the same when it comes to payroll and employee rules and regulations.
Yeah. All right, so we got just a minute or two left. Give me your last word in regards, or last thoughts on 990.
Yeah, as a nonprofit, you have to understand that you are obligated to comply with the IRS rules and regulations for annual filing of your 990. You are not exempt. And we just touched on the basic 990 forms, the 990N, which is the postcard, the 990 EZ, which is if you have assets less than $500,000 and revenue greater than 50,000, less than 200,000 is the EZ, and revenue greater than 200,000 or assets greater than 500,000 is the full 990. Now, if you're a private foundation, that's the 990 PF. So that's a little bit different because it's a private foundation. But again, every nonprofit must file an annual 990 or you risk losing your 501c3 status.
Yeah, I'm going to put my 2 cents in this too as well. I make this mistake quite a bit. I have my accountant do our corporate tax return, and I don't always review it. He does it. I don't always take a quick look at it, and it just goes right. And I would recommend to all our listeners, number one, you should be looking at your 990 because it's really important for you to understand the different categories that the 990 has, just so that you run a good nonprofit. Mm-hmm. Okay. Because you might be in front of somebody who's you're trying to pitch a grant, and they might say something about how is your administrative expenses divided up? What are they? Mm-hmm. And you're like, what? And then you realize they're talking about your 990. That's number one. Number two is, here's another thing is he or she might have made a mistake as well. So you should probably review it. He's going to send it to you. You have to sign it. And so he's probably going to, send it to you anyway. Look it over, make sure it's correct because he might have forgotten something. Like I'll give you an example. This is not nonprofit related. I bought an electric car and I get a $7,500 tax rebate. I want to make sure that my accountant has that on the form because he gets my accounting data, but it doesn't say Stephen bought a electric car. Okay. So, I am, so again, I'm at fault of not always doing that either, but that's my 2 cents as well.
Yeah, exactly. Ignorance is bliss for a lot of people. And, when it comes to being, fiduciary for your nonprofit, at the executive level, you want to make sure that when you do file your annual 990 that you review it and everything is accurate, reflecting your fiscal position every year to year.
You probably should share it with your board too, as well. Of course. You should be sending out to your board. Of course. It's good for them to know. So, they have a fiduciary responsibility just like you do. So, cool. All right. Well, that's all the time we have for today. It was a great podcast. I kind of knew it was going to be a good podcast. And so I'd like to thank so very much Joe Scarano from Araize, Araize, for coming on to today's podcast. And if you like today's podcast, please feel free to share it with a friend and also subscribe on your favorite podcasting apps. We have fantastic guests on. If you like today's podcast, please also give us a review, as long as it's 5-star. It really helps us get the word out. And of course, if you're looking for a line of credit for your nonprofit, please visit nonprofitmbapodcast.com. Or give us a call at 862-207-4118. And again, if you want to take a look at Joe's company's software, Araize, it's ARAIZE.com. And Joe, other than your and is there any other way that people can get a hold of you?
Best thing is go to the website. They could go to araize.com, as you said, or they can send an email to sales@araize.com.
Thank you. And, the last thing is, and I always end it this way, I want to thank our listeners out there for doing everything they can to make the world a better place. You guys are out there every single day doing it. I thank you for that. We really need it. I know Joe and I are doing our own part in our own way, not like you guys are doing it. But, I just want to remind all our listeners out there that you're no help to your family, your friends, your employees, your cause, if you don't take care of yourself first. So make sure you take care of yourself, your health. Every day you should be thinking, what do I need to do to take some time for myself? Because if you don't do that, your cause is going to suffer. And it's really important. So take a step back and really, enjoy your life.
Thanks,
everybody.
Steve.
Yep. Thanks, Joe. Have a great day, everybody.
You too. Ciao.